we will be going over Plan ETF. There's a high likelihood, very high likelihood that I will be enacting Plan ETF, but there's also a chance that I won't be. I'm not like jonesing to take trades, right? I'm not one of those people. I can sit in cash as long as it takes, and I am totally content with that. I hope you eventually get to that point in your trading as well. Tyson has a great question. Is there a situation where you wouldn't take a trade based on what it does that day before you're looking to get in at 3 p.m.? So, fantastic question. To that question there, Larry specifically said, listen, if your plan sets up, you are obligated to take that plan today on the day that it sets up, because if you don't take it, they never even had a plan. Might as well just take your plan and throw it out the window, is what he said. So yeah, of course, if it sets up for me, then yeah, I'll take the plan no matter what. And I have no expectations. I think that's really important as well, especially with Plan ETF, right? Plan ETF has market risk, right? It is not Plan Sit in Cash and Don't F Up. It is a way to capture additional alpha, capture additional yield without getting aggressively offensive. I'm super offensive all the time, but not getting offensive as far as your portfolio goes. So it's a great question. Nate says, can you please go over how to calculate ATR for a stock price? I don't know how you calculate ATR. All right. So in fact, somebody this morning in the chat, I thought this was really nice. They were talking about Felix, and they're like, Felix, number one, YouTuber, number two, ... Like, we don't actually know what he does because I don't think he trades. And then it said, Chris, number one, family man, number two, trader, number three, YouTuber. That is my order. Yes, for sure. And the way that I can be a family man is because of trading. Praise Jesus for that. So looking at ATR down here. So this is the average true range. Now, don't ask me for the calculations. I go into it. What's wonderful about charting platforms is they do everything for you. But the ATR value is the average true range over X number of periods. I just use a default. Could there be a better one? For sure. But I just use the default 14 periods. And so you can see as things change, it can go up. And the same stock, the average true range can go super high. So this is the QQQ. The average true range here in April was 1971. The average true range in July was 533. Joe, would you trade something that is 4 times as volatile with the same size?
No, you're messing up your position sizing. You're putting way too much risk on the table when it gets volatile like that.
That's right. And it's not saying up or down volatility. It's saying volatility in general. What are the movements looking like? And same thing is that you need to position size when it's low, actually bigger. And when volatility is high, you need to position size smaller, right? So you need to be dynamic, even in the same stock, even in the same calendar year. Your position sizing does need to be maintained based on the volatility of the stock. And it really can make a huge difference in your overall returns. Okay, so what I'm waiting for right here, and we can stall for a bit, Joe, is to see if we can get the price underneath this orange line here. I don't know why he does it, because he gets like 12 views, but he's been doing it for years. So anyway, I worked with Greg, and this is a concept that he introduced to me, which is called the value zone. Now, the way that this works is it is looking at the 20 period moving average, and then it's adding 2 of the ATRs. Let's see how this all ties together. It's adding 2 of those ATRs on top of it to get to this point here. Now, I mentioned yesterday, we were pushing 4 ATRs away from the 20 period EMA. So 4 average true ranges. That is a super hyper extended move. Does that mean that it must come back and crash down? No. What it means is I don't want you to get in a situation like this where you buy it as it breaks out super high and then only to pull back and you're on the back foot right away. How about we just wait until it gets in the value zone, and then you can buy it during Plan ETF. And as long as it runs, and we don't know how long it's going to run, this is what I'm telling you, there's still market risk here. But as long as it runs, it works great. By the way, Scott and I met this morning and totally proved out the value zone not only works, but improves profitability of Plan ETF. So I was super stoked to get Scott to quantify that I forget how many basis points. It was at least 30 basis points of additional alpha on that. So I was very happy with that. Scott is also working on all of our conclusions. So when I talk about the data, when I talk about the back tests, we're actually going to show you, hey, this is what it is. This is plan A. This is plan M. This is why we're doing this. This is why we're doing that. There's no more trust me, bros. Trust me, bro. This is a great stock. Trust me, bro. How about we say, based on the data that we have quantified, thanks to having an in-house quant, we now have established that this has a high likelihood of profitability. Just saying, I feel like that's a little bit easier to work with. What do you think, Joe?
I think that's great. I think Scott's amazing. I think you guys constantly are improving these plans. And it brings me back to this question that we got from Golden Oli. Are all the plans finalized now? I would say we're always going to have downtime. We're always going to be back testing, and we're always going to be making the plans better. And, you know, individually, that's what I'm going to do. Chris is going to do it. You guys should be doing it. You know, they're documented as they are today. They're not quite published yet. Chris is getting to that, but I wouldn't say they're ever set in stone.
I like that, Joe. I like that a lot. That's a well written way to put it, because just today, Scott and I came up with something that we need to talk about, a change to plan ETF. Not a big plan change, but a small plan change. Let's talk about that. So plan ETF. In fact, let's go to this slide real quick. When do we use plan ETF? When there's nothing set up for plan M. Plan M is not set up because market breadth continues to fall. Plan A is not set up because market breadth continues to fall. Plan sit and cash don't F up is always there. It's always an opportunity for you. But plan ETF, when there's nothing set up for plan M or A, but plan ETF shows up, you can totally take it. Now, let's talk about what plan ETF is. So plan ETF is our way to generate additional gains, additional returns, while the market is not set up for our offensive strategies. So first, we want to see an uptrend in the Qs and an uptrend in SPY. We want to see a Q buy signal and a SPY buy signal. Now, I want you to understand, this is an either or situation. And the Qs will be the or in this case. The Q heat map is under 70. So let's go take a look at that. On the Q dashboard, the Q heat map is at 67.87. The SPY heat map, give me a moment here. 2 clicks. The SPY heat map is over 70. Now, that's another reason why I wouldn't be trading plan A or M, is because the SPY heat map needs to be under 70. And so we see right here, SPY heat map is at 72.69. So SPY heat map needs to be under 70. So we wouldn't trade it. However, the Q heat map is under 70, and it does not matter. This was hard for me, but the data proves it out. It does not matter if the heat map is moving up or down, because we're not trying to be aggressive with this. We're not trying to be offensive with this. We're trying to put our cash somewhere to gain additional alpha. In the alpha meaning outperformance compared to the benchmark index. Okay. Trying to gain additional alpha. So that's what it doesn't matter if it's moving up or moving down. And then it needs to be less than 2 ATRs above the 20 EMA. Now, you can do that manually. Look at this. We're bringing it full circle. You can do that manually, calculating this, adding it to the 20 EMA, or you can use the value zone indicator. Go into indicators in TradingView and just search outlier value zone. Where the heck? Hang on. I know it's there. Outlier plan ETF. There you go. Outlier plan ETF. There it is. Outlier plan ETF value zone. Add that to your favorites and you're going to have it. There you go, Aussie Ian, right there. Outlier plan ETF value zone. Search it up in TradingView. You got it. But ChatGPT did a great job of putting what I wanted to see in place like this. Now, this only applies to plan ETF. The rest of the time, it ain't going to be there. I don't care. It's not part of the plan. Only on plan ETF. And then in this case, we would buy shares of QQQ. You can buy either shares of QQQ or shares of TQQQ. That is up to you, your personal preference. Scott has proven out that the returns on TQQQ, as you would expect, would be tremendously higher, at least 3 times higher. Why buy shares and not options? That's a great question, because I'm a huge options fan. This is not an aggressive plan. This is a defensive plan. Options introduce additional complexities that we're not trying to do here. We're trying to make sure that we are able to take care of delta meaning the move of the stock. We don't want to deal with theta. because some of these trades are over 100 days old. Could you roll it multiple times? Absolutely. Could you buy leap options? Absolutely. You do you. For me personally, this is my trading plan, remember, I'm going to buy TQQQ. Now you can take the trade at any point that these things are happening here, as long as it's inside the value zone at any point. Does that mean, Joe, that you are guaranteed to profit on this like you would if you sit in cash and don't have up?
No, you're never guaranteed a profit other than SGov, I suppose.
Even in SGov, there's the possibility of market moves after each rebalancing, which is why I don't hold through rebalancing. Well, like I say, we are introducing. Joe, you ever heard of introducing?
Which person are you? Oh Lord, I just lost it. Not intimidating, impersonating.
I'm certainly not impregnating. Don't you even think about that. We are done with that in my house.
This is going to be a good afternoon video. I can already see it.
We were talking about tampons the other day, and now we're talking about impregnating things and people. Who knows? This is crazy. So, the additional entry criteria and exit criteria that came through today, entry and exit criterias with the additional 30-day order block. Now, I haven't added this in there, but this is fresh today. Scott was working on order blocks all of yesterday when he was gallivanting around and quote moving. By the way, Scott's last day is Friday. This is some BS. I'm not going to be able to live without Scott.
Wow, that's awful. Hate to see him go.
I know, but he's got to go back to uni. Anyway, entry and exit criteria filtered with a 30-day order block. So meaning if there is a 30-day order block that pops up in your way, you don't want to trade into it, and you want to use that as an exit signal. Let me see if I can find one. Like right here. This is, let's say it's 30 days, okay? You don't want to trade into it, even if it's in the value zone. If you are trading up into it, use it as a filter to get out, an exit signal to get out. And then the value zone works as an entry filter. That's what the green highlights are right there. Okay. So, Jamie, what was the return expectancy on this? Dude, it was crazy high. I don't have that off the top of my hand or off the top of my head. That's going to be one of the things that Scott's pulls through, but it's, I feel like it was 2.5%, which is close to Plan M on its own. Plan ETF, nearly the same as Plan M. Crazy. But then if you add TQQQ, it's triple that. It's over 7%. It's bonkers. So yeah, that's why Chris is going to be doing Plan ETF for sure with T triple Qs. Would you foresee using Plan ETF in conjunction with Plans A and M? That's the point. That's the point, right? When there are not trades for A and M, we go to ETF. When you're in ETF and you see something for A or M, you can, take out X number of shares that you need to, sell those, get your cash, go buy the new trades for sure. I have not done anything yet, but if I do, which it looks like there's a high likelihood of that, we're going to do it live. Does that sound good, Joe?
Hey, I'm excited to do it live. We haven't done a live trade in like 3 weeks.
More than that. Good gravy. Mahesh has still not funded because of reasons. We're not going to get into those. But we need Mark to make the official transfer of funds. And Mark is taking care of family priorities. So that's why we haven't got the Outlier Fund up and running just yet. Do we sell off some of TQs to use for trading when we get a buy signal? That is my plan, Ozzy Ian. That is my plan. You do you, as I like to say. Zach says, could you explain how TQQQ is leveraged? I see it's cheaper than QQQ. Is it just that you can buy more? And is that the leverage? Okay, great question. I'm really glad he asked that. So let's drop off the value zone right here and close that. There we go. What I want to do is a side-by-side here with QQQ on the left and TQQQ on the right. Now, all of the signals that we're going to be taking for entries and exits are based on the QQQ, based on the actual NASDAQ ETF QQQ. We're using triple Q as the as the trading vehicle. It'd be like if we were basing our trade on options or on the Qs, and then we go buy Q options, right? We're using it as a trading vehicle. We're not basing our trades based on these. Okay. So what this measures is the percent move multiplied by 3. Multiplied by 3. So let's measure this for our example here. So yesterday, from open to close, that was 74 basis points. Here, this should be roughly 2%, maybe 2.1%. Let's see. 2.3%. There you go. So it's a triple leveraged ETF. So today, while it's down from high to low, here, that's 82 basis points. Here, this should be about 2.4%. 2.36. Pretty cool, right? That's the leverage. That's the leverage. So it's a triple leverage ETF on the daily move of the underlying, which is in this case is triple Q. Now, you probably, no, not probably, you have heard the words come out of my mouth. I don't like leverage ETFs. Now, Joe, in fact, I remember the very first time, I'll never forget the very first time that I made good money in the market. It was only $800, but to me, that was a lot, right? And I remember being in the shower when I had 45% of my hair, and I'm like, such a genius. Like, I remember this, Joe. I could put you right in my place where I did it. I'm such a genius. And it was on a leveraged ETF. It might have been QQQ, in fact, or TQQQ, in fact. But one thing that that happens with leveraged ETFs is that percentage moves don't track linearly. So, for example, Joe, if we have a stock that goes down 50%, how much percent does it need to go up to get back to break even?
50? No, 100. 100.
Common thought would have been 100 or 50. Yeah, exactly. Mm-hmm. But if you have a $50 stock, I'm sorry, a $100 stock that goes down to $50, if it goes up 50%, that's only 75.
Yeah.
So it has to double. Mm-hmm. Because of that relationship in the percentage moves, triple leveraged, double leveraged ETFs over time will erode. Now, that sucks. Options also erode. That sucks, but it's part of the game. What we have found, and what Scott's found, is even with the erosion, 3 times higher returns, even across 105 days of trades. And of course, there's going to be down days, there's going to be up days. And yeah, I have previously talked about them. They do have a place, and it is not holding for the long term, right? I mean, a lot of people think, oh, I'll just buy the SPY. I'll just buy the QQQs. Oh, you know what? Joe, listen, hey, there's these things called triple leverage ETFs. And if you just buy those and then you hold it forever, you'll have 3 times as much money as Warren Buffett. It doesn't work that way, right? They do work in the window when it's set up. However, the gains can be erased very quickly if you don't understand how the leverage works.
Great it would have been erased today, I think. That's a big red candle.
True. Let's go to that. That is a big red candle, right? So all the gains from yesterday, when it was up 74 basis points, are basically down today. But remember, this is on a day-to-day basis right here, a daily rebalancing. But overall, in general, as long as it's trending up, as long as it fits your trading plan, by all means, understand the leverage, use the leverage, just like we would use options, right? There's plenty of people that I've had to coax off the cliff for years because they're like, the theta of the options. Don't you understand? You can't buy options because of the theta. I get it. So if you want to think about it that way, that's the theta of these. It'll work out. It'll be fine. Volatility drag. I think that could be the exact name for it. I can't remember what the exact name is, but that sounds exactly right. Okay. Couple more questions. Morgie used to follow vampires, but Morgie stopped being a bag holder after that, which is great. But then I saw your reaction video and became an outlier. Never looked back. Thanks, Morgie. Appreciate that. The Joker. I'm the Batman. That is the Joker. To clarify, I only saw this video notification on Discord. Is that how these videos will be ran from now on? Well, first, super stoked that you found it on the Discord. You get a daily email as long as you're a customer. Now, the Joker, you might not be a customer. You might have snuck in the Discord for free. If so, and warning to everybody out there, the purge is coming. If you are not already an Outlier customer, you will be purged out of the Discord. But yes, it is meant to be an alert inside of Discord. And also, we send a daily email to our customers. And at the very bottom is every link that you'll need for the week. Eventually, they will be built into the platform. I'll even show you where it is. Mahesh showed me a screenshot. But it's going to be somewhere over here, the live stream links, and that will be the only place you can get it is inside the Discord. I'm sorry, inside the platform. Not even on the Discord. We only need it over there. How does Plan ETF affect your 2026 competition if you're competing in the options category? Oh, so I'll be competing in the options and enhanced growth division. I was looking it up this morning. Apparently, I would have been in 4th place right now, even with a drawdown. Who would have thought? That's pretty sick. Very happy about that. But the there you go, cracking my knuckles. You're welcome. I know Charlotte gets absolutely monkey hammered whenever she hears that. But you can trade anything in that. Basically, you can trade futures, you can trade options, you can trade stock, you can trade whatever. There's no, from what I understand, I haven't entered just yet. It still actually says enter the 2025 competition. You can enter at any time. Did you know that, Joe?
Yeah, I only knew it because I saw you had posted it in Discord, but so I kind of cheated a little.
No, it's okay. And several of my friends have won it. I want to be in that crew, my friend. I want to be there with my
That'd
friends.
Be awesome.
When you exit Plan ETF, outstanding question. We hadn't got there yet. Let's talk about Plan ETF exits. They're very simple. Very, very simple. You get a sell signal. Or if the 10 and 20 cross down bearishly. That's it. It's so simple. It is not meant to be complicated. It is just meant to give you a place to put your excess fund if you don't want to put it in cash. And these are the only signals to take. That's it. Position size. This one's going to be super easy. You ready for this? All available cash. Now, somebody might look at this and be like, what the flipping flying monkey donkey is he talking about? That's the point. It's either in cash or in Plan ETF. That is the point of Plan ETF, is a substitute for cash. Does that make sense, Joe?
It does, but I am nervous considering it's leveraged, right? And I have not traded a leveraged ETF yet, so I'm interested to see how this goes.
Well, here we go. Joe, I'm going to promise you right now, some of these will lose. Some of these will win. The wins are way, way bigger than the losses, which is why mathematically it has very incredible high positive expectancy. Trust me, bro, because I don't have the data to show you at the moment. What? Could you answer the next question by using another plumbing analogy? First off, Patrick. First off, shut up. Second off, I am not a plumber. I have no idea what the monkey donkey I'm talking about. That was a fantastic analogy this morning. Thank you. Okay, here we go. You ready for the plumbing analogy?
Yeah.
When your toilet's so backed up and you got nothing else to do, the market is working against you, but you're like, oh, I don't want my cash to sit there just to earn 4% a year when maybe I could earn 4% on each individual trade. I mean, the expectancy on all these trades for the T triple Qs is, I think it was around 7.5%. So it'd be like your toilet's all clogged up, so you can't take Plan A or M, so you use the sink. It was terrible. I'm not a plumber. Virgil, great question. If you're in Europe and can't trade triple Qs, any chance of finding something like that? Virgil, first, super stoked that you're here. There's this really, really awesome tool. Joe, let me know if you've heard of it. It's called ChatGPT. I don't know the answer to this, but I can guarantee you ChatGPT knows the answer to that.
I think the audience found this for us a couple videos ago. It's like triple Q3, maybe?
Q3, something like that.
Yeah.
Yeah, something. I try, Senior Wahoo. I try. He said it was pretty shitty. I try. Okay, and one last question that Joe saved for us from Cody. It appears the current position size document has an auto calc for the option price. How does that work? So the option price, unless Deep Thought did something, and he may have because he's working on some cool option chain stuff. The option price that's in there is nothing. It's just an example. There's nothing to it at all. If you see like $5 or $7.50 or whatever, it's just me plugging in data to make sure that it all works. There's nothing in option pricing there that should make any hill of beans for you, my friend. Just example numbers. All right, Joe, we've stalled long enough. First off, it is great to have all of our outliers here. You know what else is great? I think we're going to be trading Plan ETF.
Oh, for a second there, I thought you said you were going to give away things.
Ah, you wish.
I do wish. I like giving away things.
Giving away things is so much fun.
That's not Fridays are awesome.
Dude, I love spending my Hesh's money. Oh, wait, yeah. I thought we were there. We're not there. I thought we were. I thought we were there by like 30 cents. No, it needs to be under 597.55. It's at 597.89.90 right now. It's about 30 cents above. I'm not going to force it, right? If it works, it works. If it doesn't, it doesn't. It looks like it's not going to work. But let's take a look at what this looks like. Hold on, Joe. Let me log into Tradier, and let's go through what the process would be. How's that sound?
That sounds amazing. Let's do it.
Okay, like I say, this particular account has not been funded yet. It will be funded. This will be the Outlier Fund account, and we will show everything top to bottom, inside out, all the way. But you know what we're not going to have to worry about is liquidity, because these are like ultra liquid, only buying shares. We're not fighting for a couple hundred contracts. We're fighting for, hundreds of thousands of shares, so it's not going to be an issue. It absolutely could be a better value tomorrow, for sure. Could be an absolute so you're not giving away the new iPhone? Not today. Who knows? That could happen. I don't know. Not today, at least. So let's start with SGov. Right. Let's say that all of your cash is like mine in SGov. Tradier has totally locked up on me. Joe, am I totally frozen, or is it just Tradier?
Just Tradier, yeah.
Okay. So let's drop off here. Down at the bottom, you'll see let's say, for example, let's say you own 100 shares of SGov. You would just come down here and you'd hit sell. That's it. It's not that hard, right? Could you do it at market on SGov? Yeah, you could totally do it at market, right? I'm a huge person that says don't do anything at the market. But when you're trading something super liquid like that, no issues. I mean, the worst is you get a penny off. But when it comes to options, totally different ballgame. So you could do it at the market. You could say, sell my 100 shares at the market. Go. That's it. Done. Okay. Now you've got 100 shares worth. So what would be 100 shares worth? So 100 shares times 100.63 gives you $10,063. So then you go over to TQ. And TQ right now is trading at 102.50. So you would take your $10,063, divided it by 102.50. You get 98 shares of this. So more than likely, you might as well round it down to 98. You're not going to get rounded up to 98.17. Not going to happen. I mean, I think Robinhood has available partial shares. We're not doing that. We're big boys here. We trade in real lots. So 98 of these. And then you hit buy. Done. That's the whole process, right? It's not complicated. It's not difficult. We're not touching the options chain, but that's just how Tradier works, right? It's up there on the screen. Does everybody understand it? Everybody understand it? Okay, cool. So Steven has a fair question. How the hell is all available cash managing risk? As I've talked before, Steven, this is an ETF. ETFs don't move like options. He still remembers VKTX. I get it. I know this is an ETF, not a healthcare stop, but Trump still has thumbs for sure. Absolutely, right? Would you say the same thing if you bought SPY? Oh no, I'm not going to do all of it. I mean, if your goal here is just somewhere else to park your cash, that is what it is. And if you don't like it, dude, that's fine. Totally chill. Just follow your own plan, right? You don't have to follow my plan.
This year we saw a 20% drop in SPY, right? But how many days did that take? It was a week or something, wasn't it?
Let's see. Well, not only that, but like you can still take exit signals, right? You're still
Right.
going to be managing risk, right? You still have an exit signal right here when the 1020 crossed. And then, yeah, it went down like crazy, right? This is not, that does not behave the same as an option. That is why I am not looking to buy options. Period.
Yeah.
Full stop. I'm not buying options in T triple Q. Not going to happen.
Yeah. Like you said, you have so many opportunities to get out because it just doesn't crash down like a single stock does. If it's going to do it, it's going to do it over time.
Exactly. Yeah. So, yeah, and listen, if you want to do 50%, do 50%. I'm just showing you my plan. Right? I'm just showing you my plan. In fact, let me show some of the details from this plan ETF. 2 seconds here. Pulling up a Google Sheets document. Okay. So, some of these in T triple Q. Let's see, profit percent. So some of these would have a profit percent of like 2.5%, -3%, positive 59%. This one was 97 days long, right? This one was 21 days, ended up with a 7% loss, which was even before we added in the value zone, which was even before we added in order blocks. +6, -6, -13, right after a 25% gain. So there is more volatility with this. I'm not going to say it isn't, right? However, the average return 7.5%. 7.5% per trade. That's not per year. 7.5% on average per trade. Or just triple Qs was 2.5% per trade on average. So that is why I'll be doing it, right? And I mean, some of these like last for ages. 105 days, a 97% profit.
Whew.
You don't do anything for 105 days, and your account doubled from April to July of 2020. That sounds pretty sick. But the Qs only went up 28%. Right? So it is meant, as we talk about all the time, keep your losses small and let your winners run out of control. And by having those value zones, we're getting in at certain points when price has already run out of control, and we're just waiting for a slight pullback to get in as it continues in this uptrend. Golden Oldie, yes. Has the back testing included a mix of trading patterns? In reality, you're saying you'll enter plan ETF and all cash, and at some point exit and trade plan A or M. For sure. Absolutely. That is the plan. Why TQQ and not other ETFs? Because of the triple leverage, right? You could do this plan with Qs. You could do this plan with honestly whatever you want, but it's because of the leverage right there.
Except you probably wouldn't do it with mutual funds, right? Because you can't get in and out of them during the day.
Mutual funds you can only do at the end of day.
Yeah.
So either way, double check one last time to see if we're going to get in the value zone. No, it still needs to be down by another 50 cents or so. So we'll see. I like plan ETF bigly. I love it, Don. Thanks, man. Yeah. And this is something new, so I can understand the hesitation. I can understand the question. I can understand the concern. I totally get it. What if plan M becomes available while you're in plan ETF? Sell off the shares you need out of TQQQ, buy the NVIDIA, buy the Palantir, buy the whatever that sets up for you in that percentage. Treat it just like we did SGov. That's all. I've actually already updated the value zone indicator. So if you've already got it on your charts, I've already published one update. So yes, it is going to be updated. Tony, you're super welcome. Right now, I'm glad that Tony mentioned the drawdown because yeah, it sucks. I get it. But this is one of the reasons why when you are sitting in cash, you don't just sit there with your thumb up your backside. You do stuff, right? You do stuff. I'm still up over 38% this year. My compounded annual growth rate for the last 5 years has been 44 point something percent, right? This is part of the game. There are drawdowns and there are times where you just stair step higher and higher and higher. What we have established during this flat time right here is on the magnitude of 7 to 900% more profitable. That is not an overstatement. In fact, I think that's an understatement as far as the percentage terms go. What Scott had calculated for my edge on my plan was like 8%, 8 basis points. I couldn't believe how low it was. What Scott has helped us build is pushing 2.5% per trade on average before options leverage. Like,
and they're just tweaks to the Outlier 9, right? They're all fundamentally what we've been, following for at least months, potentially years for some of us.
Dude, for sure, right? Like I say, my personal account growth has been 44.7% over the last 5 years, 38% right here, and that was on a plan with an 0.08% expectancy. I couldn't believe my eyes when he said this. We'll be recording TQs in the trade calculator. You mean in like your portfolio manager? That's actually something I don't know. I don't want to do that. Why would I not want to do that, Joe? Can you tell me why?
Well, this kind of gives you a representation of one plan, right? And we have 4 plans essentially.
Yep. Because let's say, for example, I get in Q, T triple Q, and I get out of T triple Q, and I made, 2%. That would actually hurt my expectancy overall. That would hurt my total average win versus average loss. So I'm not 100% sure how we're going to document that. It's going to throw off the win rates. Yeah, because it is not meant to be the replacement for Plan M. Plan M is baller. This is just meant to supplement the baller plan. More spreadsheets. I'm doing Plan Z. 240 dots in Z. That is very good. Okay. And there was someone in the Discord, and I don't want to mention them specifically, but they talked about how losing 30% of your life savings shouldn't be considered not that big a deal. First off, I don't want you to go and follow my plan whatsoever. Don't do it. I am a random guy on the internet. I have no idea what I'm talking about. I'm going to lose trades. So don't you dare follow my plans. Okay. Second off, anytime that I go full portfolio, it is with the understanding of there is risk involved, right? Plan M, Plan ETF, Plan A, there's risk involved in all of those. Okay. In fact, let's go to it. VKTX, which was my biggest loser in years. How much did that impact my portfolio? Let's go take a look real quick. Hang on. We'll just search for it. VKTX. I want to end this here. Hang on. In this VKTX. Here. So it impacted my account 13%. Yeah, that sucks. However, that's just part of the game, right? And I've lived to fight a lot of days since then, right? That was my biggest loss in a while. And that was one of those things that just came out of nowhere. 40% loss on the stock. And also one of the reasons why we're not touching healthcare again. Screw healthcare. I'm done with that guy, right? Those kind of moves we don't want to deal with. So either way, that's going to wrap it for today. I'm very excited. A lot is happening. One final check. No, we're still about 50 cents high on Qs. Maybe we'll do it tomorrow. That's all right. Joe, there we go. You don't need to trade this. Yeah, I'm not telling you to do it. I'm telling you what I'm going to do. So you do you, boo.
I think we'll just have Mahesh somehow take into account which plan we're using when he's tracking these in Outlier in a future version, because Portfolio Manager may someday be an Outlier, right?
It will be. Yeah. Position sizing and Portfolio Manager will all be built into Outlier at some point. Hopefully before the end of the year. And again, yeah, screw healthcare. Joe, if somebody were looking to save time, make money, and start winning with less risk, and our big heads weren't in the way, where do you think they should click? Maybe like up there and over there. Wait, that side. Wait,
That's
there we
right.
go. All right. Thank y'all for coming today. We will definitely talk soon.